On this week's episode of The Coin Republic, we suffer the rage of the bear, draw caution before a frenzied metaverse, and head to Kazakhstan, where crypto is finding a warm and wondrous welcome from government officials. We'll have those stories and a couple of wishes for a long and lustrous crypto winter on this week's episode of The Coin Republic. Welcome to the Coin Republic. I'm your host, Captain Christopher German, and each week we wander down the garden path that is the cryptoverse to tell you about a few of the top headlines coming from the virtual world of crypto, metaverse, NFTs, and everything else you need to know about the newly emerging empire. But as we tell you each week, this is for entertainment and educational purposes only. You'd be well advised if you wanted to get into crypto, especially in these bloody times of impending recession, to take your advice from a licensed financial advisor, because I'm not it. But if you want to foray with me into the wilds of this blood sport we call crypto, then beat down that subscribe button and join us for another edition of The Coin Republic. Our top story of the week: Bitcoin, Ethereum, Solana, and Polkadot, and a long list of others top the list of losers on the week. 4 cryptocurrency prices fell up to 13%. The global cryptocurrency market dropped $100 billion since the start of the week, with Bitcoin and Ethereum remaining as a source of nail-biting for the crypto bros out there. Bitcoin dropped up to 44% and continued its march southward, falling below 20,000 as it pulled a wily coyote awaiting the plunge. While Ethereum teetered over the edge past $1,000. Crypto markets showed signs of a slight recovery late last week, with a blip northward of 10% for some top coins. Weak global cues and a falling traditional financial market cued a sharp nosedive for cryptocurrency on the whole. The total crypto market ended the week below $1 trillion, the first time since January of this past year. The daily trend for the BTC is now looking decidedly bearish. The daily relative strength index has dropped below 20 for the first time since March of 2020 for the granddaddy of coins, and remains in the oversold column, with analysts believing investors are using plunging price levels as an opportunity to accumulate more of the fabled token. Ethereum decreased to $995 over the weekend, off more than 60% on the week in its race to the bottom. It is ranked second largest crypto asset in terms of market capitalization behind Bitcoin, and it doesn't look like that's going to change anytime soon. Solana seesawed its way into the loss column this week, off 12% on the week, ending at 30.14. It is currently ranked 9th biggest crypto asset in terms of market capitalization, with Polkadot close behind at number 10. DOT gave back nearly 20% of its week highs to end the week at $6.89. And in our next story, the world had a metaverse frenzy right after Facebook announced the rebranding of its name as Meta to communicate that it is changing its course a bit towards the virtual world. So it's a term almost everyone might be familiar with by this time. In simple terms, it's a virtual world where users can put on virtual reality goggles and navigate a stylized version of themselves, popularly called an avatar, through virtual entertainment venues, workplaces, and other virtual activities. A metaverse would engage users in an immersive experience via technologies like augmented reality, virtual reality, 5G, hologram, 3D graphics, blockchain technology, NFTs, haptic sensors, and artificial intelligence. But there's always a catch, isn't there? Each and every technology being used for the base for metaverse brings its own share of risks. Experts have raised concerns that the possibility of identity theft might become smoother in the metaverse if proper security measures are not implemented first. Identity theft is already flourishing in the physical plane, with losses around 24 billion worldwide, and many expect that number to spike when the public adopts a full-on metatude. Virtual experiences could also bring particular risks to children and teenagers who may have greater difficulty differentiating between the real world and the virtual world of the metaverse. Augmented reality, one of the base layers of the metaverse, will enable new approaches and instruments for data collection of users, but that also brings up the question of privacy concerns. AR technologies monitor what the user is doing as well as their activities, so many are concerned that this information might be used for nefarious purposes or at the very least for ad targeting. Similar to AR, privacy is a primary issue with virtual reality, which uses some of the more personal information like fingerprints, retina scans, face geometry, and voice prints. Machine learning algorithms can easily mimic an individual's voice or fingerprints, giving attackers access to the motion tracking data of a VR headset, allowing them to generate virtual duplicates of an individual. This could allow hackers to overlap one another's individuals' VR experiences and can carry out social engineering attacks. Despite the risks, however, the metaverse is growing by leaps and bounds and gaining lots and lots of attention. By tackling these security concerns, users can feel safe to dabble in the new virtual world technology buffs are creating for them. And on to world news. As the world's nations step up efforts to begin to attract crypto companies to their shores, Kazakhstan is launching a pilot program to encourage selected local banks to partner with licensed crypto exchanges. The Kazakhstani government said that as long as exchanges are registered with the Astana International Financial Center, or AFIC, a financial hub based in Kazakhstan's capital of Nur-Sultan, they're eligible to open accounts with a number of local banks. The Astana Financial Services Authority's public register has a number of companies listed with them as active licenses, including Bitfinex Securities Limited, Upbit Eurasia Limited, BitU Eurasia Limited, ATX Eurasia Limited, Signal and MT Limited, and Eurasia Blockchain FinTech Group Limited. As part of its plan to lure crypto-oriented businesses, a special working group has been set up to develop rules of cooperation between crypto exchanges and banks in the Central Asian country. The group includes representatives of the country's Ministry of Digital Development, Innovation, and Aerospace Industry, the Central National Bank of Kazakhstan, and the Association of Financiers of Kazakhstan, as well as representatives of the banking and digital asset sectors. As Kazakhstan goes, so goes the world. Crypto is here to stay. Our fourth story of the day, bear markets be damned! Analysts say Ethereum could top out at 7,609 on the year and is expected to end the year at above 6,500, more than quintupling its current market price, according to a new survey of industry experts conducted by the comparison website Finder. Despite predicting ETH prices skyrocketing this year, the latest ETH price survey was described by Finder as a far more bearish look at the long-term future of the digital asset compared to last year's survey. The website dialed back its prediction of the value of Ethereum may reach by 2030, but noted that the positive outlook expressed in last year's survey has been heavily affected by the tumbling value of ETH in early 2022, as well as tougher regulations internationally. Among the experts surveyed by Finder was crypto startup Permission's chief product officer Vanessa Harris, the crypto exchange investment firm Paxora's Group CEO Gavin Smith, and Finder's founder Fred Shabeshta, as well as a number of other industry leaders. Over the longer term, most experts surveyed were still quite bullish on ETH, with the average prediction for 2025 coming in at $10,810 before an expected doubling by 2030 to $26,338. One of the most bullish individuals to weigh in on the survey was Martin Frohler, CEO of crypto trading platform Morpher. He believes the ETH's lower inflation rate, combined with the move to proof of stake and innovation in decentralization finance, or non-fungible tokens, will lead to higher prices. Meanwhile, Thunder founder Fred Shabeshta echoed a more bearish sentiment, saying ETH will reach $7,000 this year, while noting that the Ethereum network is up against increasingly strong competition. The latest price prediction from Finders comes on the heels of a survey with the same panelists that was published back in January on Bitcoin. You might want to take a story with a grain of salt, because as Finder predicted back in earlier this year, BTC would reach a high of 93,717 this year before ending the year at 76,360. Well, we'll see what happens, won't we? And finally, a note from me. The crypto winter is here, and if you have a stake in virtually any coin, you have seen losses upon losses. Every time we get a bump up, it falls to new lows, and we spend another week playing in the basement. But as any of the weathered wise men who tell the tales of winters past will tell you, count the winters. They last longer. Well, not really. They just seem to last longer, because it's hard to see your hard-earned dollars drain away in the continual crypto crash. We've not really seen a crypto winter before, have we? We played the long game thinking the rise would last forever. We thought governments be damned. We are in the age of decentralized freedom, and it will go on and on and on. Well, maybe this is just a test of the testicular fortitude of the coin-minded virtual voyagers. Maybe this will scare off the weak of heart, the barely backed, and the fearful few. We are the warriors. We are the ones who stand and fight when all the chips are down. We do not back away from times of terror, but plod forth and hold fast against the whipping winds of winter. I cannot tell you that the worst has reached us, or that this winter may not reap a hefty price from we few who stand tall in the face of misfortune. The mettle of a man or woman is found in the darkest moments and the most consequential of times, and these may be those times indeed. But someday soon, the bleeding will stop, and the sun will shine again, and the winter will have abated, and our earnings may come again. I ask you to go once more into that breach, dear friends. Hold fast against the tide, for we are the brave, we are the strong, we are the investors, and we will celebrate on the other side. Well, that's it for this episode. I hope you picked up a gem or two, or maybe just enjoyed some nice conversation about coins. Whatever your reason for playing along, do your worst to that subscribe button and join us again each week as we continue our voyage into the virtual wonderment that is cryptocurrency. I'm your host, Chris German. Thanks for joining me on the Coin Republic, and we'll see you again next week. Trade safely, my friends. Be well.